Oh, man. I made a whole 7-minute live stream and I was muted. Anyway, let's go ahead and relook at Amazon stock, which I just talked about for 7 minutes. Holy freaking crap. Welcome back to Strongman Personal Finance, okay? So here's Schlamazon right now. It's up 9.46% after hours. The stock's up 10%. Basically more than VT makes in about 20 years, apparently, supposedly, okay? So why is Amazon stock up? Let me check my audio. Well, let's go look at the presentation, okay? Amazon today announced their financial results for its second quarter ended June 30th, 2023. Net sales for Amazon increased 11% in the second quarter year over year. Like I reiterated when I was muted, they are still growing revenues, but they are not growing them as quickly. Look at the historical year-over-year revenue growth rates of Amazon in the past, and then look what happened at the end of 2021 going into 2022. Their revenue growth rate has massively slowed down pretty significantly. They're still growing revenue, but they're not growing it as fast. Okay, maybe the good old days are over. I don't know. Wonder if Joseph Carlson's going to buy this because it went up a lot. Okay, so revenue's still growing, which is good. We got North American sales up 11%, international up 10%, and AWS up 12%. Now, here's the interesting thing that I noticed. Their operating income, and this is really hard to notice, has more than doubled from the prior year. 2022 was a very bad year for Amazon. Where are most of their profits coming from? Well, they got $3.2 billion of profit from North America. Okay, that's America. They lost money on international, and they made $5.4 billion on AWS. If you haven't noticed, the vast majority of their profit comes from Amazon Web Services, okay? And international has been losing money. It's getting better, but it's losing money, okay? Now, if Amazon, which I did the math earlier, if Amazon didn't have AWS, they were kind of like Walmart, they would have the same profit margins as Walmart. Excluding AWS, their operating profit is 1.7%, which is still, it's better than nothing, right? But they are not an insanely profitable company when it comes to their, goods and delivery. They're basically what you think of Amazon as the business, okay? They're not very profitable when it comes to that. The vast majority of their profits come from AWS. Now, also interestingly enough, is AWS's profit, their revenue has grown by 12% year over year, but their operating income is actually down year over year for AWS. I don't know why. It's interesting. And make sure my volume's working. Okay, we're good. I'm not doing this a third time. If my audio went out again, I freaking quit. Net income was $6.7 billion, compared with a net loss of $2 billion. That's an $8.7 billion swing. Second quarter 2023 net income excludes a pre-tax valuation gain of $200 million, included a non-operating expense from the common stock investment in Rivian. Or did the stunk go up and they recorded some profits? Now, when a company invests in another company, depending on what percentage of the company they own and how much control they have, determines how that company's stock price or earnings are reflected on the financial statements. If a company buys another company's stock and they just own a little bit, they're generally classified as trading securities. And they can elect to have the stock value, the stock price, determine what profit they record on their income statement. If they have significant influence over a company, but they don't control it, they would use the equity method of accounting, where basically the underlying company's profits would count as income for the owning company. So when looking at Rivian, so they're saying they include a pre-tax valuation gain of $2.2 billion. What I'm thinking is that they're just recording Rivian stock going up year over year. That's what I'm thinking. I don't think Rivian is profiting. I would be shocked if they were profiting, but that's that. Not really important, to be perfectly honest. Operating cash flow was up pretty massively, okay? Free cash flow is actually positive compared to negative $23 billion. Woo, baby! Negative $23 billion for the trailing 12 months ended June 30th, 2022. For that last year, they were investing a lot, okay? And we know they were investing because they had $35.6 billion of operating cash flow for the year ended June 30th, 2022. But they had $23 billion of negative free cash flow. So they spent about $60 billion, looks like, in capital expenditures from June 30th, 2021 to June 30th, 2022. That's a lot, okay? That's more than you and I can afford, obviously. Am I still sharing? Can you still hear me? Excellent. Okay. Obsessing over the customer experience. So here they are. They're kind of bragging. Oh, look at us. Blah, 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 blah. Let's go look at some of the metrics. Obviously, I don't own this stock individually, so I don't care about this crap. I just want to look at the individual disaggregated revenues, okay? Disaggregated revenues, you want to look at that. What is that? Well, when you look at an income statement, you'll see usually one line for revenues, but that revenue usually consists of multiple different business segments. So you want to look at the business segment by segment and understand how it's doing by segment. And of course, international's dragging, of course. Only U.S. stocks go up, bro. I'm just kidding. All right, so here's the statement of cash flows. So we have a 3-month, we have a 6-month, and we have a 12-month, okay? So we're just going to look at the 3-month, compare it year over year. Operating cash flow is more than doubled, okay? That's pretty good. Let's see what the major differences are. Well, they were profitable, which helps your operating cash flow go up. Let's see. They had some add backs for depreciation. So you can see depreciation expense is up almost $1.7 billion, $1.8 billion. Why is that? Well, they invested in a lot of capital expenditures. So when you buy a capital asset, it goes as a cash outflow under investing activities on the statement of cash flows, but it's expensed over its life. So they've obviously been investing more in property, plant, and equipment because their depreciation expense has gone up pretty significantly. Stock-based compensation is up. Non-operating expense income is down significantly. So Amazon booked a $6 billion non-operating expense, a non-cash expense, this quarter last year. So without that expense, they actually would have been profitable in that quarter. I don't know what it was. Maybe it was Rivian. But they had a $6 billion loss. So when you're comparing the two quarters, huge part of the difference between these two quarters is this non-cash expense that they're adding back. Okay, whenever it's positive on here, that means they're adding it back. Joseph Carlson, pay attention. Listen to me, Joseph. Okay, I know you're smart and you have qual trim, my nut rim, but guess what? Okay, on the statement of cash flows, under the operating activities, you add back non-cash expenses. That includes stock-based compensation, depreciation and amortization, and one-time non-operating expenses that are non-cash expenses. Do you understand, Joseph? Anyway, let's continue. I just love to roast Joseph Carlson. Okay, so that was the main difference between. This is basically the huge difference between profitability. Is this non-operating expense. Without that, they would have had about $4 billion of profit. So interesting. Capital expenditures. They've actually dropped the purchase of capital expenditures by about $4 billion quarter over quarter. Let's see. Proceeds from property, equipment, and sales. So nothing crazy there. Sales and maturities. Okay, so they're spending a lot less on capital expenditures compared to the prior year, obviously. Common stock repurchase. So I love how they bought back common stock when the stock was probably at all-time highs, right? The 3 months ended June 30th. Let's go look at the stock price. June 30th. So on June 30th, 2022. Okay, so they bought back a bunch of stock, it looks like, right in this range right here. Okay, so maybe they bought the dip of their own stock. I don't know. But I was about to laugh. I thought they were probably buying a bunch of stock back up here. I wouldn't be surprised. But they bought back a bunch of stock when the stock was higher, but now the stunk is lower. They're not buying back stock. Is Amazon a retail investor? Okay. They also borrowed a ton of money last quarter. The last year compared to this year. So, I mean, the main differences I see are operating cash flow up, capital expenditures is down. Obviously, they're going to have positive free cash flow, okay? They were making buku investments. Look how good my math was. They had $65 billion of capital expenditures last year. I calculated that live. That's right. Buy my course, bro. Okay, so statement of cash flows, there's no like red flags here. I mean, nothing crazy. I don't think Amazon's going bankrupt. Okay, sales, bro. Net product sales up a little bit. Net service sales up a lot more. Let's see. Services have increased, and I imagine the services are higher margin. 64, 659. Service revenue is up 16.5% versus product sales up 4%. Okay, so product sales are little bussies, basically. Services going up a lot faster. Let me check my volume. Volume's still good. Okay. Let's see. Cost of sales is up. It grew at the if this cost of sales is referring just to these net product sales, well, it can't be. Let's see what their gross margin is. Yeah, it can't be product sales. Let's see. 134, 383 minus 69, 370. Sorry, 59, 69, 373. Right, 134, 383. So their gross profit is 48% if you don't include fulfillment. I mean, I think they also include a lot of these other expenses in here. Actually, let me go look. Let me go look at their historic gross profit. Let's see. No, okay. Yeah. I was like, that's kind of high for gross profit, but it makes sense. So if you just include cost of sales, like the direct cost of the products or the direct cost of the services, their gross margin has gone up to 48%. Okay. Obviously, they have fulfillment costs. Tech and infrastructure has gone up. Let's see. Basically, most of their expenses are going up in line with their revenues. Now, their total expenses grew at a rate of 7.4% versus their sales, which grew at 10%, 11%. So basically, they grew their revenues faster than expenses, which is why they have positive operating income. Okay. So we can see other income expense. See, you can see right here, they had this huge write down. So even then, they've still doubled their operating profit year over year. So that's good. Okay. So overall, I don't see anything crazy. Obviously, we see services are growing much faster than product sales. Gross margins improving, and revenue has grown faster than expenses. Okay. But if you're comparing it to the prior quarter, for the prior year, remember they had that one-time write-off, which distorts their profit margins. Okay, so currency. What do they got here? Foreign currency translations adjustments. Woo! Ah! Let's see. Yeah, it looks like foreign currency is the strong dollar. It's hurting them. Look at that. They recorded 2.186 billion of foreign currency translation adjustments, which skip the income statement and go directly to the balance sheet. Interesting. Okay, that doesn't show up in their profit or loss, just so you know. Okay, let's see. Oh, that was last year. This year, I'm a clown. I read it wrong. This year, they actually had some benefits from foreign currency. They just got hammered last year, man. They had these one-time expenses, and foreign currency translations were absolutely freaking brutal. It was just bad last year. Okay, but it's Amazon, bro. It always goes up. So let's see. We got North America. They already showed us the sales. So we can see North America swung to way profitable from losing money. International is losing money, but a lot less. International, bro. And funny enough, AWS's operating income is down year over year. And if you look at the 6 months into June 30th, it's down a lot, okay? I mean, it's still very profitable. Obviously, it's a huge part of their profits, but it's down. Okay, so this is Consult. We've already seen this. We've already seen the growth. Yeah, I mean, I don't know. Are you impressed with these growth rates? I don't know. Net sales mix. So North America lost a percentage as total sales. International basically stayed at 22% of sales. AWS is now 17%. So I guess the theory is, obviously they don't make a lot of money from these two right here. Okay. But AWS, if they continue to grow that and it becomes a larger and larger percentage of their sales, theoretically their profits would go up because it's obviously the way more profitable section. Okay. But let's see, 6 months into June 30th. Okay, yeah. So basically, international has gone down, and then AWS and North America have each gone up by a percentage, as a percentage of sales. The balance sheet. So this is the current one. This is the prior one. Cash is down a little bit. Securities, inventories, accounts receivable. Okay. Nothing really crazy on there. No changes. Current liabilities. Unearned revenue. Yeah, nothing really crazy on here. I mean, I don't think Amazon's going bankrupt. Let's compare long-term assets to long-term liabilities. So property, plant, and equipment is up. Operating leases are up. Goodwill, they made some acquisitions. And other assets, whatever that frick it is. Long-term assets of... Why don't they add up the long-term assets? That's so annoying. God, I hate when they don't do that. 477, 607, minus 140, 482. So they have $337 million of long-term assets. And they have like maybe 160 something of long-term debt. So they're obviously not underwater when it comes along. Their balance sheet's solid. Okay, I'm not worried about Amazon's balance sheet. Let's see. Additional paid-in capital. Wow. I don't know if they've been issuing stock or if there's been stock options. Let's go back to the statement of cash flows. Probably should have checked that. Let's see. Okay, they paid off more debt than they issued. Oh, yeah, no, they didn't buy back any stock. I don't see any stock issuance either. Am I blind? Where's the stock issuance? Maybe it was over the 6 months. Am I blind? Where's the stock issuance at? Short-term debt. I don't understand what's going on here. Usually stock issuance. Okay, so it says they're buying back. Or they bought back. I don't know how their additional paid-in capital went up. Unless it's probably, you know what it could be is it could be accruals for stock-based compensation. Because I don't see any share issuance on their balance sheet or on their statement of cash flows. Interesting. Let's see. Okay, I'm not worried about their balance sheet. Okay, I mean, obviously a little bit of shares went up, but nothing crazy. Oh my God. What is this? This is like AIDS. Ugh. I'm not even going to waste my time reading this. Oh, let's see. I think there was another chart showing their... Here we go. Okay, so here's revenue year-over-year growth rates. I know this is hard to read. This hurts my head. Net sales. So this is their revenue sales growth rates for their different categories. Online stores, revenue grew 5% year-over-year. Physical stores, what is that, Fart Fresh, up 7%. Or what's that stupid store? I'm drawing a blank. You know what I'm talking about. Farm Fresh Market or whatever. Whatever that freaking expensive store that Amazon owns. Physical stores up 7%. Third-party sellers up 18%. What is that? Includes commissions and any related fulfillment and shipping fees and other third-party seller services. Okay, so the money they're making from, or the revenue at least, from third-party sellers is up. Now we can see the trend. I mean, look over time. Year-over-year revenue growth rates are going down for every single category. They just aren't dropping as fast for third-party sellers. Subscription services is up 14% year-over-year. What is that? Includes annual and monthly fees with Prime memberships, as well as digital video, audio, digital ebook. Okay, so membership income is up 14%. Advertising is up 22%. It's not growing as fast as it was before, but it's growing pretty good. AWS up 12%. We know that. And then other up 26%. What is other? Oh, Whole Foods. I'm an idiot. I was like, what is that freaking place called? What is the other income? Includes sales related to various, such as certain licensing and distribution of video content, healthcare services, shipping services, and our co-branded credit card agreements. So their fastest year-over-year growth was in advertising and the other. But the lion's share of their, wow, look at that. the lion's share of their revenue is online stores, which is not growing that fast. So the largest by revenue is online stores. Then it's third-party sellers, which, these probably aren't super high margin, I would imagine. But advertising is probably high margin. They're growing that pretty significantly, okay? So overall, they're doing okay. And then remember with advertising, okay, ad rates go up at the end of the year. I know that because I'm a YouTuber, okay? So I fully expect that to go up. See, look at that. Look at the ad rates for Q4 2022, 11 billion. So ads have gone down over the last 2 quarters, or at least 1 quarter. Well, then they went back up. But ads, you get more ad revenue basically at the end of the year, okay? I'm a master at this. Let's see. Okay, I guess this is the growth rate in expenses. Let's see, stunk-based compensation. Look at that. They cut their employees. Employee costs have gone down 4%. Shipping costs are up 6%. Okay. Well, interesting stuff there. So that's it. I mean, they're definitely doing better. That basically 2022 was a disaster. Okay, it was not a good year for our friend Amazon, but now they're coming back. But their revenue growth rate ain't what it used to be. Okay, year over year at least. It ain't what it used to be. Will that continue? I don't know. Well, that'll remain to be seen. But hey, I guess if you bought the stock, congratulations. I guess I'm a loser. I didn't buy the dip, even though I did with VT. So that's Slamazon. Okay. He's back. Yes, I am. Jeremy and Paul would never have screwed up a video like that. That's true. I'm just an idiot. Penadil! All stocks, including clown stocks, are up massively after earnings, except PayPal, because this is a Lefebvre stock, so it had to go down. Look, Jeremy Lefebvre always wins in the long run, okay? Strongman, I'm looking at the fangs, and they're still reasonably valued, maybe except for Apple. Could that indicate that they will still run and make the USA outperform? I have no idea. I have no clue what's going to happen. China's unable to replicate these huge companies, and in CCP China, their internet giants have no chance to be as profitable as – well, actually, they were more profitable until the government cracked down. But they were making that. Let me look at Baba, like insane margins before the crackdown. Now, not so much, okay? Amazon killed it. Why didn't I buy the dip? Do you like Baba more? Of course I like Baba more. I hate U.S. stocks, bro. That's why they're only 60% of my portfolio. Qualtrim, buy my Qualtrim, bro. Just buy the largest stocks in the index in the world. Let's see. If only there was something saying Amazon could choose to make money when they wanted to. If only there was something saying Amazon could choose to make money if they wanted to. I don't know. What is it? Divest of their online business, of their retail business. Strongman, if you stake all your crypto, you get 15%. Why? I don't know. Let's see. Obviously Amazon is not going anywhere, okay? But here's the thing. You know why I don't own Amazon? Let me show you something. Let me show you something crazy, okay? Oh, hold on 1 second. This is why I don't own Amazon as an individual stock. You're not going to guess what I'm about to show you, okay? It's going to blow your mind. Don't go away. Don't you go away. Okay. Here is why I don't own Amazon as an individual stock. It's my third largest holding. 1.63% of my portfolio. Oh my God, Apple's 4% of VT now. Good God. Okay. I've got it. It's like, overweight it, man. What are you doing? No, it's 1.63% of my portfolio. It's exactly the size it should be. I like it. Market cap weighting. Now, Nvidia, I don't know about that. Tesla, I don't know about that. Google or Alphabet Google, yeah. Okay, yeah. I'd say just gut reaction. Probably overvalued. Maybe overvalued. I don't know. clown stock, mega clown stock. Probably not bad. At this price, okay. Amazing and perfect. But yeah, there's Amazon, okay? Oh my God, why don't you have Amazon? You're so stupid. Lick it. Lick it and stick it. Strongman. Now I see you own. I do. Yeah, you knew VT had all these companies, right? Apple's 4% of my portfolio. Oh my God. We need analysis. Oh my, no. Not Tupperware. That's such a clown stock. Oh, what up? Fabio was referring about choosing not to spend so much on. Well, that's what threw me off because I was like, well, CapEx doesn't have a direct impact on profitability. It impacts it in the long run. That's the thing. Because you depreciate. When you spend the CapEx, you don't immediately expense it. You expense it over its life. Let's see. Apple is your biggest position. It is. Do people not know that Apple's like the top holding of VT? I'm serious. You don't know this. Yo, why don't you like U.S. stocks? You're so stupid. You clowns are overweight U.S. stocks. I weight them perfectly in my portfolio. Market cap, mother effing weighting. That's right. You crack me up with your intros. Are you a fan of Microsoft? I mean, Microsoft's a beast, dude. That is a beast company. I'd rather, if I had to choose between Apple, Amazon and Microsoft, I'd go with Microsoft, man. Microsoft is a freaking monster, a profit-generating beast. But it's all about what you pay for it. You're still waiting on the triple leverage. Yeah, that would be so exciting, the triple leverage. American stocks are overweight. What a shock. I know. See, I thought I was all international stocks. What? Clowns. Peter Zehan. Yeah. I'm sure Apple's going to zero. Thing is, VT is rebalancing constantly, not you clowns who keeps holding Tesla while it dumps to oblivion. It's market cap weighted. I mean, that's how it works. Strongman, when is the next book coming? End of the year. End of the year, boys. Well, that's Amazon, so they slowed down their capital expenditures. Operating cash flow is up. Profit margins are up. Operating margin is up. Everything's looking bright. The only thing that's not going amazing swimmingly is their cumulative revenue growth rate year over year. It's decelerating. Okay, it's not growing as fast as it used to. Let's see. I just bought Dino Nuggets, and congratulations. Okay. Well, that's it. Let's do a Lefebvre outro, and maybe I'll do one more, maybe not. Talk to you later. Cheers.
Oh, merry stock market. Oh, man.